You're on the air with the Mortgage Man, Drew Stevens, on AM 1160.
Well, good afternoon. It's Drew Stevens, the Mortgage Man. AM 1160, Residential Plus Mortgage. Phone number 630-915-5706. I got a couple of my good friends as guests today. Again, Jim Crace, president of Financial Fulfillment and financialfulfillment.com. How are you, Jim?
Great. How are you?
Email him at moneymd@comcast.net. And again, his website is www.financialfulfillment.com. Just finished his fifth book. And we are going to talk a little bit about that fifth book and some new ideas and how to multiply your money and minimize your risk. Sounds like a good idea?
Sounds great.
Okay. Also, Jim Broline. Jim is a broker realtor over at Remax Elite in Hinsdale. How are you, Jim?
Well, I'm great.
Fantastic. Last week, I went to U of I. First time in 20 years. I graduated from there in 1980. And we went to the game, went to the Montini game last week. My son goes to school at Montini. And it was the score of the football game was 70 to 45. I was telling you, Jim, a couple days ago, that was the most exciting game I've ever seen in my entire life. Did I tell you about it already?
Sure, that wasn't basketball.
No, isn't it amazing? 70 to 45. It was actually a great game. It was so close. It was a nail biter. At the end of the third quarter, it was a nail biter. But after that, Montini swept, kind of
blew them away.
Well, stepped on the gas. Well, let's put it this way: it was just turnovers. But they had one kid on that Joliet Catholic team. Oh my God, nothing like it. 515 yards rushing.
Gee.
Yeah, it's just it's insane, And then one of our guys had 311 yards receiving, and our quarterback had 578 yards passing, I believe.
I heard the Bears just contacted him. Is that true?
Who cares about the Bears? Who cares about the Bears? I'm a Packer fan anyway. Oh, that might be bad for my radio.
Oops.
Radio show. I mean, I was just kidding about that.
No, nobody's going to call you at all now, dude.
I know. Well, whatever. I mean, the Bears will maybe be good someday. So we have a lot to talk about because there are a lot of things occurring out in the business world, and it's isn't this a confusing time? Do you find this a confusing time?
Very much so.
And
more than ever.
I think so too. And I've, as I kind of mentioned before in the last couple of shows, I've already started transferring assets over to Jim. And the reason I did is because, and I was a big stock market guy for years and years and years. My dad made a lot of money in the stock market. But after 2007 occurred with the big downswing, it's fearsome. And I used to work so hard on analyzing stocks and upward and downward movements. I would always go to, have you heard of stochastic at all? There's a thing, I should show it to you sometime, but there's a way of analyzing stocks that you can look at something called stochastic movement. And what it is when a stock is oversold or overbought. It's a different type of a thing. So I always, when it's overbought, okay, you want to sell. When it's oversold is when you're going to buy. Mm-hmm. So, and so you kind of go through, do options in that sense too. But anyway, it doesn't always work, obviously.
Yeah, when you go to the casino, you wait for somebody to put a bunch of money in the machine.
Exactly.
You come up behind them and you hit it. See,
absolutely.
None of them work.
I know. There's all these, and it's all these theories. That are going to come about. But anyway, long story short, obviously in Jim's programs, which are detailed in all of his books, but especially in the most recent one, Living the Tax-Free Life, you can learn more and more about actually getting the gains of the stock market without getting the loss. I said that loss. I'm sorry, losses. Any questions? Give us a call 630-915-5706. On the mortgage front, purchases and refis going great. Especially on the fixed rate front, the adjustables have not been going down. The stock market had a nice little bit of an upturn this week, and the downside, of course, rates did go up a little bit, but they're still excellent. You're looking at a 4% 30-year fixed with no cost and a 3.25 15 with no cost. So please make sure you call me again, 630-915-5706. We'll revisit this a little bit later in the second half of the show. Jim, what's going on in the real estate market? Again, any questions, give us a call, 630-915-5706.
Interesting year. I just saw something just last couple of days that is very unique. It's a big change in the market right now. We're starting to see. Biggest thing that I've seen is that for the first time in a long time, the cost of home ownership is actually less than rents because rents are going up.
Wow, really?
Mm-hmm. Wall Street Journals did a study of 28 cities in the third quarter. Actually found that out of 28 major metropolitan areas, 12 of them had lower cost of living for a mortgage and the other things that come along with a mortgage than for paying rent.
Is it because the mortgages are upside down? They have to demand more for the the mortgage is upside down on the landlord, that is, so that the renter has to pay more.
You're looking at two different markets.
Right.
One is on the renter side. There's just more demand for rentals right now.
Okay.
And people who own property that they can rent, they can raise rates, and they're going to.
Sure.
And you know what? It's going to continue next year. It's going to be even more severe than now.
Yeah.
And then, but on the buyer side, you're giving people unbelievable rates for mortgages.
Sure.
Plus, the prices of houses have come down to historical declines, and it came down another 6% this past year in most major cities. So, just affordability of a house is just getting more and more there.
Sure, that's fantastic. The interest rates at this level, what's funny is that it's a good friend of mine, he calls me every other day, and he always says to me, so it's a 30-year fixed at 3.5%. It's funny. And I always tell people, there's no reason to get greedy. I mean, if you have a rate that's 4% and you're waiting for a 3.5 or 3.65, and it depends on the size of the loan, but the amount of the payment is pennies and differences. So, I mean, again, let's take $200,000, for example. $200,000 at 3.625, let's say. All right, because I don't think, let's assume you won't get down to 3.5. That's $912 a month. Okay. Now at 4%, that's $954. That's $40. So, don't get too greedy, I guess is my point. If you're coming down from 5% or higher, you're going to have a huge decrease in your payment. So make sure that you give us a call. I could look at it for you. Again, 630-915-5706. And another thing, too, is if you can do a 15-year fixed or a 15-year mortgage, I should say. I always, in my 20 years in the business, I always tell people, for goodness sakes, do the 30. Because the payment's lower, you can always double up, or not double up, but make a higher payment, do a 15. But you know what, though? When the rate is this much lower than the 30, for goodness sakes, if you can afford to take it, because it's a 0.75 difference between the 30 and the 15. 3.25 3/4 of a point better than a 4%. Jim, how were you? How was your week so far from the financial planning world? I know I called you last night and you were at an appointment, so it looks like you're still busy.
Oh, yeah, very busy. I'll be busy all the way until about the second week in December.
Okay, that's fantastic.
But people get religion about money around tax time, and then they go the other way when it gets to family time and Christmas and things like that. So,
well, isn't it? I think one thing that, and I know that I like the idea in theory isn't it a good idea to help people just kind of set it and forget it? You know what I mean? That's a good term we use. We're all like
autopilot, right?
Just get something set up, and Jim can do that for you. In essence, he can get you so that you've got your automatic payments or deductions going into the plans that get you guaranteed 8% rate of return, and you have safety. Could get much greater than an 8% rate of return, obviously. And Jim can explain a little bit more on how that is going to be protected. So, could you perhaps describe the bonus plan and the tax-free plan in a few minutes? We only got about 3 minutes left. But 630-915-5706 if you've got questions.
Well, my opinion is after getting blasted in the stock market in 2001 and 2002, I have a very definite opinion about the market. But when they came out with these products with 8% guarantees on them, it doesn't make sense to be in the market anymore or gambling your money, period. Any of it. Even if you're young, it doesn't make any sense. So, but the main thing you want to do is you want to see a real financial planner instead of a product pusher. And the people that we call talking heads on TV, you were talking about all those formulas that they have Head and Shoulders technology for reading stocks. They don't work. Not long term.
The green and the red. You ever see the green and the red things? The green is buy, red is sell. They
just don't work.
Yeah.
I heard they work a third of the time, which is not good.
Well, 70% of the time, the money managers can't beat the blind index.
Right.
And we use the blind index as our reference.
Sure.
So set it and forget it, like you said, autopilot.
Right.
But having any money in the stock market and this gambling anymore, especially nowadays with the economy the way it is, don't do it.
Yeah.
Go to the safe stuff, guarantee your money at 8 and just forget it. Let everybody else worry about what's going to go up and what's going to come down. Because I hear people all the time talking about it, and I don't even listen to them. I don't care. I'll set it and forget it.
That's good. That's good.
So, but the main thing is you want to have a real financial planner working for you, not just a product pusher, not just somebody selling you commodities or stocks or insurance products. The first step is to do a cash flow statement.
But just to interrupt you, though, just briefly on that, especially when you're speaking to seniors, is there a fear for seniors that they might become greeters at Walmart someday? Does that ever come
yeah,
up?
but one of the main things we do is some of the products that we use that we recommend in the financial plan, you can't outlive your money.
Okay.
The contract says we'll pay you for the rest of your life. So, I mean, that's a pretty important thing.
Not that there's anything negative about being greeted at Walmart, but the whole concept is you had to go back to work.
Well,
right?
I can't tell you how many people have had to go back to work
Sure.
because their CDs went below 2 or below
Sure.
1.5.
Right.
I just looked at my bank statement, and obviously we'll have to give you the 5 steps after we come from the
We're running
break.
out of time here, so.
But I just looked at my bank statement, and I was getting 0.03%
On the money
on
market.
my interest-bearing checking account. And that's
just
like having
insane.
your money in the mattress. And I tell people, go ahead and put your money in the mattress, but you're going to have a bad back after a few weeks. So,
Right. And there are some, but I do want to talk a little bit about mattress money because I have one customer who's got mattress money, and there's a way that we can actually use it, but it gets a little bit involved. People think they can just do a purchase and bring money to close, and you can't. You have to verify sources.
well, I have one client that has $250,000 in a safe in their safe in their house, and I asked them
Oh, gee.
make sure they give me their address.
Oh, my gosh. 630-915-5706. Again, this is Drew, the Mortgage Man, along with Jim Broline. Jim Broline. Like the
Famous
Bodines,
actor.
right?
Famous
Jim Broline
actor.
and Jim Crace. Talk in a couple minutes.